on Fake Business News Network. The other day, Kramer said, don't listen to the banks. They're giving you wrong information. When he told you to buy Merrill Lynch, remember? And what happened? They went broke.
Get the truth at philsgang.com.
Join my gang, philsgang.com. Get the truth. And also listen to me on my podcast on YouTube and Rumble. That's philsgang.com.
Phil Grande has successfully taught tens of thousands of investors how to navigate the market with confidence.
Hi, I'm Phil Grande at philsgang.com. That's right, philsgang.com. Join my gang for 10 days. It's free. If anything, during that 10-day period, you're going to learn how the market really works. You're going to find information that you never had before. You're going to walk away and go, I didn't know that. So join my gang for 10 days free, philsgang.com. And you're also going to learn how to make money when the market goes down. It's kind of silly just sitting there when the market going down, hoping. Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's Gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
And welcome to you by podcast. My name's Phil Grande, CEO of philsgang.com. Now, the market, remember on Friday we had the hit in the chip sector. Now, remember, the most important part of this AI, okay, is where companies like Oracle, these kind of companies, get together with OpenAI, and their stocks will shoot up 25%. What we're seeing today, we had another company do a deal with OpenAI. I think it was Broadcom. I'll double check that. It was yesterday, and it only went up 10%. That's a problem. What's happening is we're starting to see some reluctance, some questions as to, again, what kind of returns are these investors getting when they're putting in $200 billion, $300 billion? And right now, all indications, not good. Not good. We saw this during the dot-com stage. But as I said yesterday, this is worse than dot-com. Because at least dot-com, they could mask it, how bad it was getting, because they were bringing companies public every day. 5 to 10 companies, sometimes more. But the focus now is not on IPOs, not 5, 10 a day or 20 a week. No, that masked a lot of sins. The problem we have now is that you only have holding up this whole stock market, okay, is, again, you have 3 major chip providers. 3, that's it. You have NVIDIA, AMD, and Intel. We're going to take a look at these stocks in a moment. And then you only have 3 major cloud providers. So you have Microsoft, Google, and Amazon. Now you have a bunch of, not a bunch, you have like smaller cloud providers like IBM, Alibaba, Oracle, which is about maybe maximum each one contribute about 3%. The other 3 that I just talked about, NVIDIA, AMD, and Intel, and Microsoft, Google, and Amazon, they're about 63%. So you can see that if one of those trip, we are in deep trouble. And so we were much better with .com because we could spread it out longer because of the excitement of IPOs. That's not the case here. We need companies coming to the table every day and saying, oh, we're doing a deal with OpenAI, so to push the stock up 25%. And that's average, but we didn't see that yesterday. So So if you take a look at right now, gold, okay, and think about the stock market overall, gold in the market. I've always told you, gold is a magnificent warning. It tells you something is wrong with your economy, something is wrong with your stock market. And if you look at the numbers, I did them again for you here today just to make sure I had them right. If we look at gold from 2020, 5 years ago, it's up 154%. Boy, if that is not a red flag. Then let's take gold since this January, up 51%. Now, if you take the miners, they're up 121%. The S&P is only up 36%. And for our case, those poor people, only 5%. So, and again, if you go and take a look at the stocks, when NVIDIA on Friday dropped big, if you got out of NVIDIA, you made a mistake because you're not reading the flow of money. Is money going in or is money going out? And the stochastics showed us on NVIDIA, if you got out, you made a mistake. The only time you get out of these stocks is what they call a crossover. And that's where, if you look at your stochastic, you have a red and yellow line. If that red line hits 80%, then you get concerned. Now, my chart, my Pro 2 chart, the one that we designed ourselves 25 years ago, it turns red for you so you can see. You don't have to guess. But my point is, NVIDIA did not cross over. So if anybody got out of that stock, now you certainly reduce your stock. That's what you're supposed to do. Reduce the amount of shares, reset your stop, but don't get out. Don't panic because it can go right back and make a new high right away. And and I'll show you what I mean by that. And when I'm talking about these crossovers here, let me get one for you, and I can show you what I mean, a crossover, so you have a good idea what it is. Okay, so a good crossover, let me get here, is right here. Let me show you. Okay. This is a good defined crossover right here. See that? Here, I'll try to make that big for you. When it turns, see now, you don't have the Pro 2, but let's say you have my chart, okay? What happens is it gives you a warning. See this red line crossing over 80%, crossing yellow to 80%? It will turn red. See how it turned red? That's the beautiful thing about my Pro 2 chart. I designed these 25 years ago. And over 225,000 people have used these charts because of this, because it lets you follow the money. If you don't have a chart like this, then you're not going to know what's going on. But the point I'm making is there was in NVIDIA, there was no crossover. So people that were getting out were making a mistake. If you look at AMD, now these are the three biggest chip providers rather. And if you look at AMD, when AMD dropped on Friday, people panicked and got out. But look, what a mistake they made because there was no crossover. In fact, it was showing strength, relative strength. And then if you look at Intel, so you have all these people panicking. They got out of Intel on Friday, and they're still getting out today. But the chart is telling you by following the money, that's what you got to do. You got to follow the money. You got to follow the pricing. See, they don't let you do that on Wall Street. If you follow the pricing, you're going to be okay. But if you're following the fundamentals, you're not. If you're following the jibber jabbers on these financial TV shows, you're not. So again, take a look at this. Here, I'll try to make it bigger for you. Look at this. So people were jumping out of NVIDIA, AMD, Intel, when the stochastic reading is telling you to stay in, take profits, readjust your stop, but don't get out. Now, if you go to Microsoft, these are the three providers. Now, what I'm doing here is showing you the most important stocks. These are the stocks you should be trading, nothing else. So you got, except gold, of course, we're making a ton of money on gold. Microsoft did have a crossover. In fact, the crossover on Microsoft was in September 5th. We're October 14th. So it would have told you not to invest in Microsoft, but yet people are investing in Microsoft. And the problem is they had no idea because they don't have a color-coded Pro 2. What happens is from September 5th, the low was $492. The high was on October 6th, $51. They're jumping in. They're buying when they shouldn't be buying. And then look what happened. It started to collapse, and it is collapsing. But if you paid attention to your stochastic, and you paid attention, again, to your Pro 2, but even just with the stochastic, it would have told you, why are you getting in, and why you listen to these people on CNBC and Kramer and the rest of them to buy Microsoft? It's clearly, you got to follow the pricing. You got to follow the pricing. Google, now again, I'm showing you 6 major stocks that hold this whole market up. So Google, again, there was no confirmation. Now, Google has started a week, but I wouldn't be getting out because we haven't got a confirmation yet. I mean, I wouldn't get out totally. I would take some profits, but once it hits 80% and it starts turning red, you better be out of Google. See, and most people don't have a tool that tells them this. It's just like people with 401ks. They have no idea the money they're losing. Can you imagine 401ks are only up 5% since April when the stock market's up 36%? What, are you totally insane? Totally nuts? The biggest scam ever. I did a whole show on that the other day. It's one of the biggest scams. It is a total disaster. Benna says the biggest mistake he made in his life, he says it's gotten to be greed. Wall Street's all about greed. The fees are hidden, and you can't make money on a 401k. Yeah, you will catch times that everything's going wonderful, but you never get out when times are wonderful. Greed keeps you in. That's like we talk about the tourist investor, okay? That's the problem with the tourist investor. He's all about greed. He has a gambler mentality. He's impulsive. Fear of missing out he's driven by fear of missing out. That's why they never make money. Oh, they'll make a hit now and then, but they give it all back. But gold, again, can you imagine? Who would believe that the miners are up 121%, but your 401k is up 5%? And they sell you these 401ks like ice cream. And here's the problem with the 401k. They lie to you. First of all, if you notice, if you're with a company, they don't give you any education on your 401k. Okay? There's very little education. And because, remember, your 401k, the company that gives you that 401k, and then the sponsor, their sponsor who sells them the mutual fund they stick in your 401k, together they make sure they give you the most expensive mutual fund inside your 401k that's got so many fees. It's incredible. And so that's why you're having trouble. I mean, can you imagine, look at your 401k, it's up 5% since April? You know, if you were with the spiders, you'd be up 36%. And the spiders are much better because the spiders, not only can you sell short when it's going down, which you can't with a 401k, but you take over a 50-year period. You've gotten delivered. Now, this is without shorting. This is when it goes down, you can short a spider. You can't do that with a 401k. But spiders, that's a 36% return since April to now. Can you imagine that? 36, that's incredible. Compared to your 5% with your 401k. Now, it's very easy to work the spiders. You should be buying the spiders. Now, the one reason why people will never get rid of their 401k, because remember, 401ks were a total disaster. They couldn't sell them. People were really, they're lying to people left and right. Say, oh, you can, I talked about this the other day. Hey, get a 401k. You can make your investment decisions. You could be another, you could be another Warren Buffett. Are you kidding? They took away from you a professional investor with years and years of experience, a pension fund manager, and they said, you take his place. And they couldn't sell it because it didn't make sense, right? But the minute they said, we'll give you a 50% match, oh my God, that was it. And that's when everything went to hell in a 401k. Going back to your chip providers and your cloud providers, again, before you panic and get out, please make sure that you identify what your stochastics are doing. If they haven't hit the pause button, don't get out. Reduce your shares for sure, but don't get out because they can go right back up. And it's a shame that you have smaller cloud providers like IBM. And IBM, people panicked on Friday. Amazing, okay? And yet, why are they panicking? If they looked at their stochastic and it had my color-coded chart, you would have never gotten out because there's no crossover. God, if I could just convince you about crossovers, that's the thing you don't want to get caught. If the stock's crossing over, you get out. If the stock's coming down, it's profit-taking if it doesn't cross over. If the red stochastic line doesn't cross the yellow stochastic line and the candlesticks are green, it's telling you, don't get out. Because all it is profit-taking, not selling. I'll be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox Business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang, to my podcast. So, Our dollar, this is another thing no one's thinking about. You got to watch the dollar. Now, a dollar, remember, a weaker dollar makes our imported goods more expensive for our consumer. And it's coming at a terrible time with these government shutdowns. These government shutdowns are terrible. Already, just in 1 week, there was 4,000 federal jobs cut. And actually, and then you take the small and medium-sized businesses that depend on the federal government. They have contracts with the federal government, lost 33,000. Those are the people that got really hurt. And with the weak dollar, it's making our goods that we are importing, which we import everything, more expensive. Now, if you take a look at the dollar, I told you the other day, as the dollar's been coming down, if you go back just a year, the dollar has dropped. You can give me a percentage, Willie. Okay, since December 19, 2024, the dollar was around 30.69. And today, and I'll bring you to the low, and the low was around 27.
12%.
So the purchasing power of your dollar has dropped more than 12%. That's the killer. That's the killer. Now, the weak dollar, imports are more expensive. So when our dollar, and it's just started to go up just a little bit. It's just started to rally a little bit. In fact, I've been telling my gang members that we'll buy the dollar if it breaks the 200-day moving average. It's at the 200-day. It's tested it twice. It fell. So right now, the dollar's at 27.92. The low was back in at 26.87 back in June. So right now, we have a consolidation. If you look from approximately April 17, 2025. Remember, that's when we had the low. That's where we put the low in. That's when the stock market crashed, remember? So the dollar's been going sideways since then. And now just in the last few days, the dollar's trying to break out. The dollar's trying to get stronger, but it's not strong because you got to look at the overall trend, and the overall trend is down, We have a weak dollar. So not only are we losing all these jobs with this shutdown, which is ridiculous, okay? Again, you're giving people, you're taking from the folks the power of their purchasing. Their purchasing power is going down. This is really bad stuff. And wages in September, which they're not going to tell you, fell from 7.1% to 6.6%. Now, somebody says, well, that doesn't sound like much. Let me tell you how much that is. That's like if you're building, let me give you the numbers again. We fell from, our wages in September fell from 7.1 to 6.6. To an average person not in the market, that sounds like, oh, that's not bad. No. Let me give you an analogy. You're building a bridge across a creek, okay? And it expands. You have to go from one side of the creek to the other. It's about a mile. And you miss by 3/4 of a mile. That's how much 6.6, 7.1 down to 6.6. Very serious. So when you're losing not only the power of your dollar, and you're losing your wages are starting to contract, and we have no strong economic growth. Everyone said, look at the strong economic growth we had in the second quarter. That's a bunch of BS. And again, nobody is hiring. We're at a point now, we're very close at a point. We're not there yet, but we're very close at a point where U.S. employers are going to really start just taking the sign out of the window, help wanted. This is what happened right before the 2008 crash. But let's say all this stuff I'm giving you right now, let's say I didn't give you that information. You just got to look at gold. And gold is telling you we're going to have a crash. But can they expand it? How long can they keep going before we have a crash? A long time. Because like I always tell you, we could go another year, maybe even more. A lot of people, pros, who dumped their stocks and cashed in and made a ton of money, they're now sitting back going, oh man, I shouldn't have cashed out. What the hell's going on? Because they're not going to stop doing cash. They're not going to stop doing buybacks, stock buybacks. That's keeping this whole market alive. It's keeping the Congress wealthy, the members of Congress very wealthy, the CEOs wealthy. Nobody wants this party to end. And gold knows it. And that's why if you're going to be in gold, you've got to stay with the miners because everybody's buying gold. But now you got to be careful. If you didn't get into the miners with us, if you didn't get into GDX, and I'm telling my gang members, please keep taking profits. We had 2 entry levels into the miners. The first time we got into the miners was back in, March of 2024. We had a beautiful buy signal. It turned green on our Pro 2. We had a beautiful uptrend. And then we had a correction. And that was around a small correction, October 2024. We put that money in our pocket, and I said, let's wait until we get another nice buy signal. And we got a beautiful buy signal on January 28th, 2025. And we rode that all the way up to June 2nd, 2025. Then we took most of our profits. But then we started to see something happen. We started to see a consolidation pattern. And then we started to keep the solid buy signal on our Pro 2 color-coded chart, which tracks buyers. See, that's the thing I did. This chart I developed 25 years ago. What's beautiful about it, it tracks the price. It tracks the money. Is money going in, money going out? This is no toy. Over 225,000 people have used this chart, and it works. Now, gold has gone straight up since July, since July 30th. I mean, look how much it just tore, just straight up. How much longer can gold go up? Long enough to keep warning you. When you see gold going up, it's warning you we have a terrible labor market. The labor market is the most important component, of our economy, of our stock market. I mean, you got to have a strong labor market, and we don't. New hires have declined year to date 58%. But the stock market keeps going up. But wait a minute, when we say stock market, we're talking about 3 major chip providers, 3 major cloud providers. That's it. And you got another 3 little cloud providers. And you have, of course, you've got your semis. They're in this business. Like, of course, your NVIDIA, your AVGO, let's see, what's another one you got here outside of Micron Technology, and that's it. About 3-4 others. That's it. So the government, again, right now is Biden really concentrated on increasing during the election federal workers that make over $108,000 a year. Actually, it's more than that with all their benefits. A private sector person makes, on average, about $68,000 a year. $68,000. But now take the dollar that has been crushed by about, 14%? Just dropped this year here, 14%. Your buying power, go to the supermarket. So gold, keep watching it. If you're going to buy gold, buy only the miners, and use gold if you don't buy it, because you got to be really careful right now, because all the easy money's been made in gold. Now's the hard money. But gold, as long as it keeps going up, it will keep telling you, despite the lies about the strong economic growth, we don't have strong economic growth. We don't. We just don't. Now, when you look at, as I said, the dollar, the weak dollar, everything we import is costing more. And that's been going on for a very, very long time. And if you go and you take a look at the dollar, okay, UUP is the symbol, and you bring it back, I tell you what, just bring it back, I'm just going to go back since December 18, 2024. I mean, think about it. The dollar dropped from a high of 30.63. We're down to 27.92. What are you, nuts? That's crazy. So we got a weak dollar. We don't have purchasing power. And the bond, and remember, when you have a weak dollar, yes, everything we import costs more. And again, when you look at the bond market, when the Fed starts cutting rates, interest rates drop. But who benefits from that interest rate, the Fed interest rate dropping? Only the top 1%, the CEOs and their companies. When the Fed cuts rates, it doesn't benefit us on Main Street. I mean, it does, yes, but what I'm saying, it's really done to cut these interest rates for stock buybacks, to borrow money. Then the price, remember what happens, the price of your long-term 20-year bond rises, takes off, and yields start dropping. So what happens is when you start seeing falling yields in the bond market, just look at your bond market every day. When yields start falling, they fall on bad news. Bad news is good news, because when bond yields fall, it implies a stark rally in growth stocks, which drives the market, which is tech stocks, especially our AI stocks. But remember, even though it's telling you yields are going down, that's going to make a rally, because it's going to help your AI stocks, your tech stocks, your growth stocks. But this is bad economic news all around. And it's telling you unemployment, the amount of unemployment checks are increasing. It's telling you when you see yields drop, the bond yields drop, and tech stocks start taking off and everybody's happy, behind the curtain comes the problem. It's telling you that we have more and more people who, again, are getting unemployed. We have no strong jobs. They're all declining. Weak labor market, slow economic growth.
1 minute.
And again, investors start bidding up these tech prices, which becomes a bubble. So even though you see falling yields, when the Fed cuts its rate, its short-term rate, and then you see the 10-year Treasury yield start going down and the market starts rallying, it's not good news overall. It's not good for the economy. What you want to see is a strong dollar. And then with a strong dollar, you want to see yields going up. Banks are going up. That means the economy's doing well. You don't want to just sit there every day, oh, look at this, isn't this great? Interest rates are going down. They're cutting rates. And look what this idiot did. He cuts the Fed rate. What a moron. Saying, I'm going to cut the Fed rate because that's going to increase a bunch of jobs. Companies are going to start hiring. Just the opposite happened. But as long as you follow the money and you know how to sell short, you're going to do fine, no matter if the market goes up or down. It's only these people that don't know how to sell short that lose money. Take a look at your 401k. You see what I'm correct about that. All right. Join my gang, Phil's gang, free for 10 days.
You have been listening to Phil Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.